What is a refinance or remortgage? When you should be looking to do it on your next property, the 6 months rule, and much more. Stay tuned! If I can change my life, so can you. Subscribe to my channel and I show you how. My name is Fabrizio Cravero and this channel is all about property investment for the UK and overseas investors. If you're new to the channel, please subscribe. We are going to create a community of investors that grows together. But now, your time is valuable and let's go straight to the point. First, I'm not a mortgage broker, I'm a property investor, and this video is not intended to be a financial advice. That said, remortgage or refinance is the process of renewing or replacing your mortgage when your current product is due to expire or when you may want to raise capital for other purposes. Of course, if the existing amount of equity in the property allows you to do that. Well, from the definition I just gave you, you can tell straight away that there are two different reasons why you may want to remortgage or refinance. First can be the case that your current mortgage fixed term may be about to expire. For example, if you had 2 years, 3 years or 5 years fixed rate mortgage and that term is coming to an end, you got some option available. Usually, after the fixed rate, the mortgage product reverts to the lender standard variable rate, and that usually makes the monthly rate much higher. In this case, you have the option to remortgage or refinance your current mortgage, either with the same lender or with another lender. That's how the process works. As I said, the time frame to expect when we are talking about mortgages can be quite long, as I said in this video here. So, I suggest you contact your mortgage broker or your bank 3 to 6 months before the term is about to expire to avoid the possible monthly rate increasing at the end of the term. Once you find the product that matches your criteria, and that can be either with the same lender, in this case you will just have a product transfer and the process can be faster, or with another lender, and then you start the mortgage application. You will have all your documents assessed. The lender will instruct a surveyor to evaluate the property, and as long as they are happy with the evaluation, the lender will then issue a mortgage offer. With the mortgage offer, the solicitor will request a redemption statement from the current lender, and they will pay the current mortgage lender off. So, your new mortgage lender will replace your current mortgage lender. If you do a like-for-like remortgage, you will just pay off the current balance with no further borrowing. However, if you want to borrow more and raise capital for whatever reason, that's an option for you as well. And that leads me to the second reason why you may want to remortgage or refinance. And that's the common one among the property investors, which is to raise capital to increase the portfolio. Now, let me show you some numbers to let you understand better. Let's say you bought this property here worth £80,000 with a mortgage. You got 75% loan to value mortgage, which means you borrow £60,000, meaning you need to add £20,000 of your own money as a deposit. But then, as a wise property investor, you add value to the property through a refurb, and you spend another £20,000 for that. And all the acquisition costs, like a solicitor, surveyor, property agent if you use one, mortgage broker, etc. In total, this property will cost you £40,000. And now, because through the refurb you managed to add value, the property may be worth £115,000. I could have shown you a much better example, but these are realistic numbers nowadays. As you know, the market is so hot at the moment that it is hard to get better deals than that. Sorry for the interruption, we get back to the video in a moment. You may be planned to invest in the UK, but you live far away from the area where you want to invest in. Or you live overseas like me and you don't know how to do it. I prepared a free training where I show you how you can invest in the UK no matter where you live. Join me in this free training. There is a link in the description below and I'll let you enjoy the rest of the video. Back to the example. Once you remortgage against the new value of £115,000, again at 75% loan to value, you will borrow £86,250. And practically, you will pay your original mortgage of £60,000 off and you will keep £26,000 250. But you spent £40,000 initially to buy the property and fix it up. That means that now the money left in the deal or the money you actually invested in the property will be £13,000 750. So practically you get to hold the property worth £115,000 with £13,750 only. And you actually have £28,750 worth of equity on it, which is 25% of the value of the property, which means you are quite in a safe position in case of a market correction. And that's the reason why property investors are so obsessed with the remortgage or refinance. You can see that it is a very powerful tool that allows you to grow the portfolio. But now, let's talk about the 6 months remortgage rule. First is not a law, but a rule that came out after the credit crunch to avoid what was called the same-day refinance. Practically, it says that the lender should not lend to a borrower or a buyer within 6 months of buying the property or borrowing money. Either way, whether you buy a property cash or with a mortgage, the lender is advised not to let you finance or refinance the property before 6 months. Now, I heard many different opinions about that, and after talking with my mortgage broker to double and triple check for you, I can confirm you that yes, there are lenders that allows the remortgage even before 6 months, but the conditions may not be as favorable as if you wait for 6 months. So typically, you better wait 6 months to remortgage or after you purchase using cash. But in this case, you will not be able to release equity for at least 6 months. Now you know what the refinance or remortgage is and when you can do it. Then, of course, it depends very much on which phase of your life or your investment you are. If you want to grow the portfolio, it's great. But there's maybe a point in life when gradually you may want to slow down a bit and you may even want to pay off your mortgages. As I said, I'm not a financial advisor and please always consult a mortgage broker. But my suggestion is to take advantage of debt, especially now when the interest rate is still low at the moment and probably not for too long anymore if the inflation keeps on rising as it is now. But please don't over leverage. Remember what's written on the mortgage offer. Your home may be repossessed if you do not keep up repayments on your mortgage. On the other hand, sometimes I see investors that are so scared to get a mortgage that they wait years to buy their next property by the time they manage to save enough money. As always, I believe that we have to have a good balance in life. And like Albert Einstein said, life is like riding a bicycle. To keep your balance, you must keep moving. That's just my thought, but what I'm interested in, what's your game plan? What's your strategy? Let me know in the comments below. Check the free sneak peek of the Property Investment Secret course where I can teach you how you can use the BRRRR strategy and increase your returns. And if you gain value from this video, I really appreciate if you press the like button, subscribe to the channel, and let's create a community of investors that grows together. Invest with knowledge, create financial freedom, and I'll see you in the next video.